the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you are ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look at what the markets are doing today. We saw that in a little bit ago. We kind of got our sneak peek at the markets. Dow Jones now down 131 points. The NASDAQ is down 60 points. The S&P 500 down 1002. That's to be expected. Tough day today. Today's the end of the quarter, obviously, so a lot of things happen in the markets. 10-year Treasury down 3 basis points. Mortgage-backed securities are up 6 basis points. But what is that? How does that translate to you? How does that make you feel? What is that going to do for you? Well, we did get, as we do every Thursday morning, the outdated data from Freddie Mac. And I say it's outdated because you are a listener of Ron Siegel Radio, so you know that even though this data came out to us, it was released at 7 o'clock this morning, California time. And they said the 30-year fixed rate loan, 4.67%, according to Freddie Mac on their mortgage market survey. And they do that survey Monday through Wednesday. But wait a second. You know better because you listen to Ron Siegel Radio. We give you the exact number that loans were locked at yesterday, 4.811. And I will give you the disclaimer. This is from OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So yes, Freddie Mac came out 4.67. The real number, 4.811, is what loans actually locked at yesterday. That's up about 1.5% from the beginning of the year. We've talked about that. But the issue here is not what is happening, because you can go to that super secret website, google.com, and they'll tell you exactly what's happening. They don't tell you why it's happening. Well, here's some of the data. Initial jobless claims measures individuals filing unemployment benefits for the very first time, reported at 202,000 claims for last week. Represents an increase up from 14,000 from the previously revised report of 188,000 claims, and was below expectations of 197,000. Continuing claims decreased 35,000 to 1.307 million, the lowest level since December 1969, when it was 1.304 million. Headline PCE. This is the Federal Reserve's favorite measure of inflation. Why? Because it understates inflation. Headline PCE for February was increased by 0.6%, below the expectation of 0.8, increased by 0.4 to 6.4 year over year, coming in below the 6.5. Core PCE increased by 0.4, lower than the expectations of 0.6. Why do I say that the Fed likes this one better? Because it's lower? Well, CPI actually comes in higher because they give a higher weighting to nuisances like rent and medical expenses, out-of-pocket medical expenses. Yeah, so the Fed doesn't like to talk about those things because I guess you don't have to pay for them. I tell you all the time, it costs extra to have a roof over your head. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.